Welcome, dear traders. Happy Sunday. It's a weekend, so it's time for our weekly MK block summary. Let's get started with the big one, euro dollar. So here on the 25th, we have a classical dumb money switch, okay? The dumb money shorties came in and sold the market, the red bars. So the smart money algos detect that and push the market up against the shorties, taking them out, taking their stops. What happens? The longies think, you know what? Okay, it's going to be a breakout to the upside. So they buy the green bars you can see here. So again, the smart money algos detect that as well and push euro dollar down against them. All right, so we call this a dumb money switch. You can see from shorties to longies on the dumb money side. And the algos are just seeing that and killing these dumb money positions. Okay, this position hunting is a vital part of the market causality, as we know. Also note on the squeeze indicator how the dumb money switched completely from one side to the other. In total, as you can see here on 26, euro dollar had for our reversal energy down. Longies are buying the market, so the algos want to push the market down against those buyers. Okay, you see the upward sloping squeeze line, so more and more buyers came in, so therefore the algos go after those buyers and push euro dollar all the way down with this 4 hour reversal energy. We've seen it many times. Dollar strength is a result of this, and we already said it last week. Then at the end of the week, we had a pullback towards the inner range MTS here of the shorties. Okay, nice long trade. Some shorties are coming in. We have a pronounced medium-term stop, this green line above the price. So we can trade toward that and place our TP or take profit, just a spread before this target. Beautiful trade. Nothing new here. Okay, let's continue. Cable. Went for this beautiful inner range medium-term stop, the green line, boom. Nice long trade. Also took the upper order gap zone there, the gray area, by the pip. Okay, so beautiful long trade there. This is how this works, how the algos operate. They take the stops, they fill the orders, and they do so according to what the dumb money does in terms of their positions, whether more shorties are coming in, whether more longies are coming in, where we are in terms of the 4 hour range, etc. So then, of course, we have a classical 4 hour reversal down. Again, a dumb money switch from shorties to longies, similar to euro dollar. So, of course, this is a typical 4 hour reversal set up down. Okay, pound dollar going down against those dumb money buys. A beautiful reversal trade post MTS stop hunt. Okay, so we have a post MTS stop hunt situation on the 1 hour chart and post order gap zone hunt situation. Very good preparation for a 4 hour reversal down when longies come in, because the stops of the shorties have been cleared. So now they can go down nicely against the dumb money positions. Okay, so that's a good example to understand this logic of the algos. It's not very complicated. Going down, taking the lower MTS. Okay, some beautiful trades here. And overall, we see at the end of the week on the day chart. Okay, longies in total dominated. Therefore, the price, of course, went down and cleared the low. If longies continue buying like they did this week, okay, they can also go to the long-term stops, the pink lines, and that will result in dollar strength. Euro pound, okay, finally we had the shorties leaving and inner range MTS, which built up over some sessions. So nice down move, one of the best trades, the short trade here towards the MTS. And you see nicely on the day chart, okay, they have cleared the 200-day moving average, the blue line here. They've cleared the plateau, they have cleared the highs. They have done a little pin towards the high and then a down money switch, so therefore down move towards those inner range targets. Not difficult at all, and well done if you caught this short. Australian dollar, so we have an MTS at the beginning of the week above the price, nice long trade. So shorties and above the price, a high with a medium-term stop and order gap zone. Of course, they will push up and take those, and look, they took it by the pip. They literally took the order gap zone also by the pip. Look at that. Okay, that's the precision of the causality we have seen so many times. Watch all the videos of the MK block summary, then you can see those examples over and over again. You must be a fool to claim that this is random. It's not. It has been documented over many weeks now. Many of you have the MK web. You see all of this live in front of your eyes unfolding via the charts. So this is a causality. Look at that. Shorties, boom, they go up, they take the target. Longies, like in euro dollar, dumb money switch from shorties to longies. So boom, they go down. You understand? This is the causality. This allows you to predict the next Forex moves. That is what works. This is re-engineering the smart money algos. Okay? And that results in a beautiful 4 reversal down as a result of the down money switch on the forward chart. Yeah. So very, very good. Kiwi, similar. So Kiwi looked already very bearish at the end of last week, and overall you see, like, to make a long story short, also with long is dominating, so Kiwi went further down, further dollar strength with a squeeze on the day chart, so that dominates everything. So when you shorted Kiwi, even if it was out of the range, well done, because you understood that the squeeze on the day chart will of course dominate. We know that. Dollar cut, inner range MTS, beautiful short trade there, boom, taking it out. Okay, these trades are all the time there. And overall, we know shorties dominated, so they went for this high, this zone up there. The shorties were expanding, so it looks bullish. Dollar cut, it can clear out still and go and clear the high. Dollar yen, inner range MTS below the price, boom. Okay, as I wrote at 20 past 2, dollar yen should take the medium, the M30 inner range MTS around the 149.8 level. This down here. So what happens? Boom, it went down. The same day, a few hours later. Beautiful short trade. Tell me someone who makes those kind of predictions. Okay, live. That's really cool. So pound yen, similar thing. So lower MTS, then had a MTS above the price, then had again one below the price. So went back and forth a few times. Some nice short-term trading. And look, during the week, 1, 2, 3, 4, 5, 6 targets got filled. Okay, if you caught some of them, well done. All right. Can't catch everything, but some at least. Euro yen, 2 option strike signals short there with an MTS also. So of course, boom, they fill those OSTs. Nice, beautiful trade. There's no way to see that from a naked chart. You need to know where the option strikes are and with the expiry. Then we had this amazing situation. Okay, boom, stop hunt to the MTS and back up. This is the causality, all right? That's the power of the causality. Look at that, the pin. Exactly to the MTS. Okay, what else do you want to see? Okay, I have given enough proof. Now it's about you studying the stuff and applying that stuff. The ball is on your side, not on mine. Euro Aussie had MTS below the price, boom, took it there, easy to predict that, nice scalp trade. Then had above the price in MTS, will probably take it. Pound Aussie, similar thing, okay? Option strike targets, MTS below the price, bam, 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 boom, filling it, taking the MTS, beautiful short trade. Then going up, taking the upper MTS, I mean, it was like Pac-Man, all right? So that was a good week, not bad. All right, yeah, gold, we saw there are those OSDs. It can be that it finally took this MTS below the price, but it can, if more long is coming next week, it can normalize further down and try to fill the option strike targets. Similar with silver, they try to come down and take some stops. And Bitcoin, after this nice up move, you see longies are coming in, so it's going down against the longies a little bit at the moment. So yeah, some beautiful examples, very repetitive. We have seen all this now over weeks and weeks and weeks. If you don't have a clue what I'm talking about here, you have a lot of work to do. But in a nutshell, okay, Forex is manipulated. The algos operate according to certain principles. I have exposed and defined and structured those principles so you can counter that by understanding that stuff and by using the MK web, so you don't get hunted, position hunted, stop hunted by those algos, and you can actually trade. You still need to be dedicated to good implementation. So I'm not claiming that trading everything live is easy as such, because you need to have a good mindset, good psychology, you need to have your emotions under control, you need to have a proper setup. You need to have like a schedule which makes sense. You need to have a risk policy that makes sense. You need to be disciplined. You need to wait for the right setups and then trade them, okay? You need to be concentrated. You need to minimize the amount of mistakes. So all that is necessary, and that's where people always can improve. But in terms of having a trading edge in this chaotic naked price action, this is the edge and it never changes, okay? The causality is the reality, and it's there, it's leading information. It's not comparable to any historic or lagging or whipsawing indicators. You just need to make sure that you understand what's going on in the market, that you get your timing right, that you use reasonable lots, and then you just implement and protect your downside. And you do this day in, day out. You never go away from your rules, okay? You need to be stable, you need to be mentally stable. And when you do that, you will create a nice upward sloping, smooth equity curve. You will have losers here and there, but overall you can reach profitability despite all this manipulation. All the best, lots of love.